Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the gold market. It seems that we were a bit wrong in our suggestion that Fed should say the truth to the investors and actually take more hawkish steps in the current environment, just because we discussed in our weekly report what the real problems stand, and but it seems that they decided to postpone the announcement of this some terrible moments to the later periods, and in general statement was moderately dovish, so it was not really too much different from the expectations, because quantitative tightening program had been announced, although with a bit slower pace in the beginning. So they intend to start with the 45 billions pound selling within the nearest 3 months, and later to September it should be accelerated to the 90 billions, and rate has been changed according to expectation. But at the same time, if you have listened maybe or read what Jerome Powell told in the press conference, he again had mentioned good consumption, low unemployment. So good consumption is a myth. It's just because we take a look at it in our weekly report, and you could see that consumption stands high because of the just spending of the people's savings. So households are losing savings just because all support programs, pandemic support programs for the government, have been closed. So as you know, 70% of the gross domestic product in the United States is coming from the consumption. And if consumption is dropping, the expected rising of the gross domestic products in the next quarters seems at least doubtful or arguable. And with this environment, we think that the Fed meets significant difficulties on the common meetings, and in general in making the forecast and bringing the assessment of the economy in the future meetings. So anyway, currently, whatever it will be, we see that moderate positive reaction on the gold, seen on pullback. We do not expect that this should change the trend that we have, but it could trigger a bit deeper retracement maybe. So on the daily chart, one of the important things that we need to keep an eye on is a possible bearish grabber. It might be formed today, tomorrow, because tomorrow we also will get the non-farm payrolls release, and if we will get the grabber, that might become the pattern that bears could try to use, because it definitely provides good point for stop placement. It will be evident, and at the same time it could become the trigger pattern for downward continuation right to the OP, which could mean that pullback is over. It's a moment that we need to keep an eye on, but it hardly will be formed today. On the lower time frames, despite that more or less solid pullback that we've got recently, market still hasn't formed any bullish reversal swings. So we can see that this swing actually stands in the same tendency of low lows and low highs, and it stands a bit different compared to euro currency. On the euro, we see the bullish reversal swing, which means that, well, if you would like to take the long position, you haven't gambling on a Fed statement recently, so we just think about buying the gold, with making some scalp, maybe bullish trade with this some extension to higher levels, we suggest that it would be better to wait for a few moments. First of all, be sure that you will not get the bearish grabber on the daily chart, and second, trying to get here the bullish reversal pattern. Currently it seems that, or at least hopefully, you could get the kind of the reverse head and shoulders. So if indeed gold intends to show slightly higher retracement, and you could wait for market hits the confidence resistance around 19 or 7, 19, 15, and then shows the pullback, and that will be your entry point for a possible ABCD pattern to the upside somewhere to the 1940. That's in approximately the logic of the bulls. If you intend to buy gold, and you need to get you would like to get good entry point. So this, by our view, is the best scenario that you could follow in the current circumstances. On an hourly chart, we do not see something really special. That's here just ABCD pattern based on recent actions. OP has been hit, minor retracement. Now we're going to XOP, which is a 1906. And that probably might be the part that makes an agreement with this fib level and might be the part of the neck. So maybe we could get the neck a bit sloped. This kind of neck probably might be formed. But anyway, it doesn't mean that head and shoulders will be unacceptable. Just anyway, we will keep an eye on the head and shoulders pattern in this case. That's actually what we have on the gold. That's been said for the bears. Do nothing currently, wait for clarity on the daily chart and clarity with the hand and shoulders. If even we will not get grubber, failure of the hand shoulders, for example, here, it's also will be the signal market standing to go lower. For the bulls is opposite story. So you are watching for a forming of this pattern and watching to avoid the grubber on the daily chart. If everything will be good for the hand and shoulders and you will have no bearish pattern on the daily, in this case you could try to ride on this pattern with a bit higher retracement somewhere to the 1940-1935 area.